Uranium is an unusual market. In the 1800s and early 1900s, people used uranium for colouring glass and radium to paint the dials of watches and instruments so they would glow in the dark. Small amounts of uranium were mined in a silver mining district called Jakobstala or Thala in the Czech Republic. This is where the word dollar comes from. Interest in uranium spiked during World War II, where access to sufficient quantities of uranium was a key success factor in the Allies developing a nuclear bomb. Today, most uranium demand comes from civilian nuclear power, and uranium is explored for, mined, traded, and burned as nuclear fuel by companies all over the world. The WNA describes 15 major deposit types as well as a number of subtypes. However, the key ones to remember are sandstone deposits and unconformity deposits, which account for the majority of commercial uranium mining today. Sandstone deposits include roll front deposits like those found in Kazakhstan and the USA. These are typically low grade but extracted using low cost in situ leach mining methods. Tabular deposits like Orano's open pit and underground operations in Niger. Basal channels like Dalur and Kagagda in Russia, as well as Beverley and Honeymoon in South Australia. Unconformity deposits include MacArthur River and Cigar Lake in the Athabasca Basin of northern Canada. Whilst exceptionally high grade, their positioning near large bodies of water means they must be mined using highly specialized techniques. Aside from sandstone and unconformity deposits, we should also mention Olympic Dam, a unique polymetallic iron oxide breccia deposit in southern Australia, South Australia. This is the single largest delineated uranium resource in the world, as well as a world-class copper, gold, and silver mine. The spread of average resource grades for uranium deposits is wider than for other minerals. Whilst most large-scale copper mines have grades of between 0.3% and 1%, economically viable uranium deposits have grades ranging from less than 0.1% to 2%, and deposits in the Athabasca Basin have grades of up to 20%, 20%. It follows that extraction technology plays a larger role in the economics of uranium mining than for other metals, where mining costs are more tightly correlated to grade and resource size. For most metals, mining is divided into two broad categories: underground and open pit. Uranium is an exception. In addition to underground and open pit, we must also know about in situ leach, or ISL, sometimes called ISR in the USA. Whilst ISL techniques have been used to recover small quantities of copper and nickel, they're pretty niche and remain a tiny percentage of total production. By contrast, 40% of uranium production comes from ISL, mostly in Kazakhstan. ISL involves pumping an acid or an alkali solution into the rock, then recovering a uranium solution which undergoes further processing, typically ion exchange, solvent extraction, and drying, before being packed into drums as yellow cake. The land footprint of ISL is very low, as there's no need to excavate the rock. However, groundwater contamination is difficult to avoid, so it is best done in remote areas away from potable water aquifers. The flow sheet for most open pit and underground uranium mines is variations on the following: blasting and hauling, crushing and screening, leaching, liquid-solid separation, ion exchange, precipitation and drying, packing. There are two main exceptions: underground operations in the Athabasca Basin, mining very high-grade deposits. In complex conditions will deploy specialized techniques such as ground freezing and jet hole boring. Olympic Dam has one of the most complex flow sheets in the world, recovering significant quantities of copper, gold, and silver, in addition to 5% of the world's uranium. Moving to products and units, the uranium concentrate product shipped from the mine is called yellowcake, or U3O8. Yellow cakes range in colour from bright yellow to grey and khaki green and contain about 70 to 90% uranium, but have not yet undergone conversion or enrichment. The most common uranium compound found in yellow cakes is U3O8, which has a distinctive yellow colour. In North America, production is reported in pounds of U3O8, whilst in Australia, tons of U3O8 is not uncommon. Europeans use tons of contained uranium, and most analysis of reactor requirements, regardless of geography, is also calculated in tons of contained uranium. Most analysts convert U3O8 numbers to uranium contained by multiplying by 0.848, the proportion of uranium to oxygen when you take atomic weights. Primary supply. In 2024, Kazakhstan produced approximately 23,000 tons of uranium, around 40% of the world's primary uranium. Nearly all of this comes from around 10 in situ leach operations in the sparsely populated Kaiserlorda and Turkestan regions of southern Kazakhstan, about 600 kilometers northwest of Tashkent. State-owned Kazatomprom has significant ownership in all Kazakh mines, giving it equity ownership in about a quarter of the world's production. A number of Kazakh operations are JVs with foreign companies, including Canada's Cameco, France's Orano, Russia's Uranium One, and China's CGN Mining, giving Kazakhstan access to capital, technical expertise, and guaranteed offtake. Canada produced about 17,000 tons of uranium, or 30% of global production in 2024, whilst Australia produced 4,000 tons, around 7%, and Namibia 6,000 tons, with Russia at about 2,600. Conversion, enrichment, fabrication. Yellow cakes are converted into uranium hexafluoride, UF6, a gas, before undergoing enrichment. Enrichment is the process of increasing the concentration of the U235 isotope to between 2.5% to 5% for civilian nuclear power. A feedstock material will have 0.71%, which is the amount of the U235 isotope found in nature. Enrichment produces two streams of UF6, one enriched in U235 and the other depleted in U235. The amount of enrichment effort is measured in separative work units, or SWU, SWU. SWU is a complex unit measuring the amount of work involved to achieve a given product volume and assay from a given amount of feedstock volume and assay. Enrichers will vary SWU according to power prices, capacity utilization, and the uranium price. For example, lower power prices and/or higher uranium prices will incentivize an enricher to perform more work on each unit of feedstock for a given product volume and assay. Because of the dual purpose with weapons proliferation, enrichment is a tightly controlled process, and there are only a small number of facilities worldwide, mostly located in countries that are recognized nuclear powers. Enriched uranium is fabricated into fuel rods and fuel assemblies. First, enriched UF6 is converted into a UO2 powder, which is then pressed into pellets approximately 1 centimeter in diameter and 1 centimeter long. These pellets are then filled into rods which are fixed into framework structures in precise arrangements. Fabrication is a highly specialized process, and designs vary significantly by reactor. Demand. Each pellet of uranium yields about the same amount of energy as 1 ton of thermal coal, making it the most dense form of energy available. The first wave of nuclear power plants were built in the 60s through to the 80s in North America, Western Europe, Russia, Japan, and Korea. High-profile incidents like Chernobyl, 4 Mile Island, meant few reactors were built in the 90s. The industry was talking about a renaissance in the noughties, but this was quickly put on hold in 2011 following the Fukushima disaster in Japan. Nuclear programs in Western countries have been in retreat since then, notably Germany, which decided to close 17 reactors, accounting for 25% of the power needs. This has been a silent disaster, resulting in the burning of 10 million tons per year of coal that otherwise would not have been needed, not to mention the damage to German industry caused by having some of the highest power prices in the developed world. China, the Middle East and countries in the Indian subcontinent continued to build after 2011, following a brief pause. China now has 58 operable reactors, with a further 32 under construction and more than 100 planned and proposed. Within a decade, China will have the largest nuclear fleet and be the largest exporter of nuclear technology on the planet. The Overton window in the West is starting to open again on nuclear power for a few reasons. There's a better understanding of the cost and issue of scaling renewables. There's an awakening to geopolitical risk and the importance of security of supply. The realization that AI and data centers will require vast amounts of reliable baseload power. The cost of nuclear in the West has exploded for a few reasons. Limited hands-on experience. Efficiency comes when an engineering team is building their second, third, fourth, fifth reactor. And in many cases, the West hasn't built reactors for decades. There's now an excess of regulation and a lack of standardization. Small modular reactors, SMRs, offer standardization and the hope of more proportional regulation. Whilst SMRs have seen an inflow of money from Silicon Valley in recent years, they have long been promised with limited results. Substitution. The main substitute for uranium is other means of power generation. However, these are long-term decisions driven by capital cost and public opinion. Uranium is just 10 to 20% of reactor operating costs compared to coal or gas, which might be 60 to 80%, and has high fixed costs. Turning off reactors is expensive, and most have limited capacity to load follow. Consequently, uranium prices are neither a driver of operating costs nor investment in new capacity. Whilst a small number of reactors use thorium or are able to burn mixed fuels, this is not driven by uranium prices but stems from security of supply, for example in the case of India, and development of fuel cycles that produce less waste, R&D. No energy source is 100% safe or clean. No fatalities, negative impacts on human health and environmental impacts for all forms of energy. Coal is the worst, with high fatality rates directly from mining and respiratory conditions, as well as second-order effects of combustion. Oil and gas is second, with blowouts, explosions and fires at rigs and refineries, as well as premature deaths from toxic exposure and transport-related facilities. Whilst rare, a small number of high-profile dam failures put hydropower third on a fatalities per terawatt-hour basis. Perhaps surprisingly, on a per terawatt-hour basis, fatalities associated with nuclear is comparable with solar and wind. Human health and environmental impacts are more difficult to compare. Solar has a very high land impact, which is problematic in areas with high population density and biodiversity. Perhaps less problematic in low population density, low biodiversity areas like deserts. Moreover, the supply chain presents risks to workers such as exposure to silica dust and the use of coal as a reductant for making polysilicon. Uranium mining is not without its environmental concerns, but is low impact compared to fossil fuels. High-level radioactive waste is less than ideal and can remain hazardous for thousands of years and is difficult to manage. However, the volumes are small and plans for deep geological repositories are well advanced. Cheap, reliable energy has had a massive positive impact on the material well-being of humans. This is difficult to fully appreciate without spending a lot of time studying it and understanding how poor Homo sapiens were for much of their 300,000 year history. We are left with an imperfect set of trade-offs that will also vary according to the local conditions. Secondary supply. reactor requirements have exceeded primary supply for decades. The shortfall has been made up by secondary supply, notably decommissioning of military warheads under the megatons to megawatts program, government stockpiles mostly held by the US and Russia, recycled uranium and plutonium, re-enrichment of depleted uranium, and underfeeding. Military and government programs have now come to an end, and this leaves a significant gap for primary supply. Inventories held by utilities. Nuclear power utilities also hold inventories. Given the size of these inventories, tactical decisions about fuel procurement play a significant role in price formation and spot prices. However, they are not fundamentals. Utilities in the West typically hold inventories of between 2 to 3 years of reactor requirements. This covers them through an 18-month fuel cycle plus some reserves. Utilities in Japan and Korea have historically been more conservative, going for 3 to 4 years. China currently has 10 years of its annual reactor requirements covered, but it also has more than 30 reactors under construction, so inventory as a function of reactor requirements will likely taper down even as purchases stay high. Sales contracts. U308 is sold on long-term offtake agreements. Contracts are not dissimilar to other commodities. They specify volume, quality, price, and logistics. However, unlike some commodities, the spot market lacks liquidity, and pricing is a matter for individual parties to negotiate. 10 to 20 years ago, offtake agreements could be life of mine, or a decade at a fixed price. Today, prices are renegotiated more regularly and all linked to prices reported by UXC and Trade Tech. Price history. During the 70s, 80s, there was a big build-out of civilian nuclear power, liberalization of the uranium market. Following this, prices were very flat in the 90s and the noughties, around $10 a pound. And this followed the Chernobyl disaster, 3 Mile Island incident, and a surplus of secondary material had flowed into the market following the end of the Cold War. Prices began to rise in the early noughties on talk of a nuclear renaissance, depleted reserves and under-exploration. Uranium spot prices famously spiked at $136 per pound in 2007, although in reality little material changed hands at this price. Prices plummeted along with all other commodities in 2008 and 2009 following the GFC, but remained high by historical standards at around $40 or $50. Another flare-up in 2010 was abruptly halted by Fukushima in March 2011. The resulting scale-back of nuclear power programs and hype around renewables meant prices fell back to $20 in the mid-2010s. They started to recover in the early 2020s, hitting $100 in early 2024, and $60 to $70 in 2025, reflecting tight supply and a more optimistic outlook for nuclear power. Thank you for listening.
From Rio nights to Chinese ports, metal flows and marker reports. With every beat I break it down. Golden tones in a trading